Another video. Today we're going to take a look at the NASDAQ 100 from a fundamental, technical and order flow perspective. This is the final update before the Federal Reserve sends the markets either up or down tomorrow. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, I've been speaking about the NASDAQ 100. I've been speaking about the interest rate hikes. I've been speaking about everything. Well, guess what? We basically about 29 hours away from that decision that's going to determine whether we're going to see this market melt to the downside or if we get that short correction before that continuation as well. Now, before we get started, it's very important that you understand that the fundamental data drives the long-term momentum and the technical data drives short-term momentum of the market. It's very important to note as well, if you are new to the channel, higher interest rates means a reduction in stock prices. So if interest rates increase, you can expect the stock market to decrease. Now, this is what we're expecting yesterday. We're currently sitting at alpha basis point. We're expecting the Federal Reserve to hike interest rates with another alpha basis point, and as a result of that, we're expecting the stock market to continue the rally to the downside. Now let's start with the technical analysis. Now, if you start on the monthly time frame, what do I have? Now, based off the most recent structure, we need to talk about the most recent structure. So you can see over here that the NASDAQ had printed strong level of support. Support got broken and support's now being tested as resistance. And we can obviously see that the market's quite far away from this level over here, and we could anticipate a pullback. In fact, we could get a liquidity spike to the upside tomorrow, and we can definitely expect the market to possibly go and test that level before the continuation to the downside. Now, I always say this: you have to be reactive and not predictive, and you have to learn to always adapt to the ever-changing market environment. Now, on the weekly time frame, what do we see? Now, from a weekly perspective, I'm not sure you guys remember, I spoke about the NASDAQ when it was sitting at this level, explaining all of the reasons why we can see that meltdown for the market to print this equal low. In fact, the market had now broken below this very important structure, and we can see how the NASDAQ is currently testing this level again. Now, this level over here acted as a strong level of resistance. Market broke above that, came to test it as support. Support became support once again. The market then broke below support. All of that supports now again resistance, giving us a contradiction between the weekly and the monthly, that we are potentially bullish on the weekly for the short term, and on the weekly we are being bearish as well. Let's drop down on the daily time frame and see what do we have over there. Now, if we drop down on the daily time frame, we can see from a daily perspective. Now, the market is currently still trading within this consolidation based off my last conversation. This level over here acted as a support. It got broken and became resistance. Now, if you look left over here, you'll see that this is the level that I'm referring to, that the market is stuck in a consolidation with. Now, we can see how the market had been moving sideways in this level. Now, it's very normal for a market to be moving sideways. And I'll give you an example. If you look at the DXY, we have the same situation over here. The DXY is moving sideways as well. Now, the reason for this is there's high impact news expected. They are supposed to drive the volatility of the market quite aggressively. And as a result of that, what investors do is they tend to halt, or they stop, and they waiting for this news to come out tomorrow before deciding whether they're going to continue buying or whether they're going to sell. So investors, if they're not happy with what Powell's going to say tomorrow, they will then dump the dollar and buy up the stock market. If Powell gives them exactly what they want, which is alpha basis point, the stocks are going to have to give up the gains, and the dollar will continue the bullish momentum as well. Now, on the daily time frame, this is what we have. Now, it's quite clear that this market is going to consolidate up until tomorrow. Now this is a daily candle, so we can potentially expect this market to still continue higher, and then we'll be in tomorrow. We could potentially see the market move down, come somewhere here, and then we get that interest rate decision. Now it's very important that you don't trade the news before it comes out. If you like to gamble, you're more than happy to do that, but there's two ways to trade this. The market could potentially move to the upside. We could potentially tomorrow see what's known as a liquidity spike. The data gets released, the market gives a massive spike, grab all of that liquidity that's going to sit around this level or above that level, and then the market then come down and then start that continuation to the downside. Now it's important to note that this level over here had acted as support got broken. When support gets it got resistance. When the resistance gets broken, it becomes support, and when support gets broken, it becomes resistance. Now if the Federal Reserve gives us a half a basis point hike, then good for us. Then we're going to wait for a daily close below this level on the retest. We're going to start looking for selling opportunities, because then we'll have the confirmation of what the market's going to give us. But if the market if Powell does not give us what we want, then we can have to expect the NASDAQ100 to break above that level and then continue this bullish momentum for as long as it wants to. Now it's important that you keep in mind that you do not want to trade buy stops and sell stops. You can definitely expect liquidity wicks that's going to come through. If you've never seen a candle look like this, so if you've never seen a candle look like this, then you'll probably see one tomorrow. There we go. So most of you saw this candle already, where the NASDAQ goes up, down, come back in, then grab all that liquidity in there as well. So NASDAQ, yeah, it's going up. You could probably get like how many pips is this? I don't know, 2,500 pips. But that's nothing. But you could probably just buy that up. But just make sure before the news comes out that you are bidding there as well. Now, next up, we are going to look at the Co2 data, so the commitment of traders, and this tells us what the biggest banks and hedge funds are doing in the market. Based off last week's report, we can see hedge funds added 2,286 long positions, which is buy positions, and they closed 5,389 sell positions. The overall net positions went from minus 4,840 to 7,684. We can obviously see last week we had some bullish momentum there and then some sells, so there's really no movement in the market when we are moving sideways as well. But like I said, the true joy is going to come tomorrow when the Federal Reserve announced those hikes, and also when the FOMC press conference, depending on what they are saying. Next up, we are going to just look at what's going on in the market this week in terms of this article from CNBC. It says here stock futures were flat in the pre-marketing trading Tuesday. So we know the market is just flat at the moment because it's waiting for that. Also states here that April was a dismal month for Wall Street, and now the market's entering seasonally a weak period of stock while facing multiple headwinds. They include tighter Federal Reserve policies, high inflation, recession worries. We know that the US has got all of these things currently going for them, going against them as well, and the ongoing Russian and Ukraine war. It says here the Federal Reserve is set to announce Wednesday a key decision on interest rate decision, which is exactly what we've been speaking about now, which is this, and this is going to take place tomorrow at 8 p.m. So for those of you that watch Generations, I would suggest that you leave that or Movango. I suggest you leave Movango tomorrow and make sure that you are focused and you keep your eyes on what the Federal Reserve is going to decide. But I can tell you now there is going to be a half a basis point interest rate hike there as well. Guys, I hope you're ready for this massive move tomorrow. I hope you guys get in. I know I'm going to find a way to get in here somewhere. But I have to get in here in any case. But guys, thank you so much for your time. Thank you for taking out the time out of your day to watch the video. And as always, good luck and cheers for yes.